For now, the markets are holding steady. One of the top gainers in Nifty 50 today is indeed IndusInd Bank, more than a 5% jump coming in on this particular counter, followed by stocks like Trent, which is higher by 2%. And the autos are making a good comeback because there are some reports suggesting that this rare earth issue can be resolved very soon. The industry players as well as the government is quite active and taking it at the very first priority, and all these auto majors like Maruti, M&M, Bajaj Auto, even Eicher Motors are holding on strongly in trade right now. On the flip side, it's select IT counters that are on the declining side. TCS, Infosys, these are some of the biggest drag in the Nifty 50, but nothing to complain much because the breadth of the market is looking quite cheerful. But let's talk about the state of the economy then, and let's welcome on board Suvodeep Rakshit, who is the Chief Economist at Kotak Institutional Equities, joining us on the show right now. Hi, very good morning, and thank you so much for your time. And firstly, the headlines that we are getting to understand because of this early monsoon and the good monsoon that we are already seeing, especially in Mumbai. It's expected to bear a good crop this time around. So, Suvodeep, firstly, give us some sense that how do you see the crop season going ahead? What could it really mean for the cropping season and the inflation as well? What are your predictions?
Well, I think the good news was delivered sometime late in May when there was an early onset of monsoon. But if you look at the data on the rainfall till yesterday, you would see that the rainfall across India is around 17% below the normal rainfall for the season for the first 17 days. Now, this is not a good news as such, but the good part is that the monsoon progress has restarted. Till around end of May, early June, it had stalled somewhere around in the mid of the country, and then now it has started again, which means that hopefully by the end of the month, we will see the monsoon cover across the country. Now, the important part is that more than the June rainfall, the July and the August rainfall is more important for the crop production. So there could be a delayed sowing in terms of the Kharif crops. But if July and August rainfall is good, because almost like 60 to 65% of the rainfall for the monsoon is around that period. And if that period rainfall is good, you could see the crop production staying on the positive side. And that should be the more, I would say, the key metric to watch out for. From an inflation perspective, we have seen inflation coming off, especially on the food inflation, coming off from around 11% peak sometime mid last year, down to around currently around 1%. This is the food inflation, and the overall inflation is now down to around sub 3%, right? Now, this should hopefully continue over the next few months, especially at the headline level. We should see headline inflation below the or let's say between 3.5% for a prolonged period. The full year average for FY26 should be around 3.5%, which is a very good thing in terms of the inflation outcome. We should note that the RBI's target of a CPI inflation is 4%. If we have a good July and August rainfall, then I think the prospects of these inflation prints being sub 4% should continue till the end of the year, which is around December period.
Point taken. Suvodeep, thanks so much for joining us. And while you are talking about a very optimistic inflation target, if you take a look at the RBI commentary that we've had for that quarter for FY26 target from the RBI for inflation is around 4.4%, slightly higher than the band of 4%, the target of 4% that we have. What are you making of this figure? Because we understand that macros are looking good right now. Inflation, both CPI WPI looking in control, our manufacturing data, that trade deficit for us has reduced. While macros are looking rather stable right now, what would indicate reaching that 4.4% figure by the end of FY26?
See, the last quarter of FY26, which is the January to March of 2026 year period, there is a unfavorable base effect to the inflation trajectory that we will see. So from a sub 4%, we will move closer to a 4 to 4.5% range during those 3 months. And I think on a sustained basis, that is where the comfort zone in terms of the inflation trajectory would be, somewhere between 4.5%. Now, the point is that it's not necessarily that a shock is leading to the above 4% inflation prints, which are estimated. But this is more of an unfavorable base effect. Of course, in terms of risk, we do not necessarily know whether the monsoon will pan out the way it is expected in terms of the estimates. There could be food price shocks that come in over the next few months, which will contribute to inflation peaking, or rather inflation moving towards the 4% plus mark earlier than what we are expecting. So those kind of risks will be there. Apart from the monsoons and the food prices, you could also have upside to the crude oil prices, which can kind of filter in terms of higher domestic prices, not just of the retail fuel prices, but the wider industrial fuels also, which will have impact on the overall inflation numbers. So from that perspective, there are upside risks from both the global as well as the domestic side. It's just that as a base case, we have a normal monsoons with the prospect of the crop production being on a positive side, which is where the cap in terms of the inflation is coming in. But of course, the risks continue.
Also, Suvodeep, one of the key wins that everyone will be tracking today is the FOMC meet outcome. So give us some sense that what are you penciling in, because the broader street estimate is that this time the rates will be held steady. And along with that, especially on the commentary front, what are you expecting to hear? Can it be a pivot or more cautious from the Fed?
So we do not expect any change in the rates in today's policy. In fact, we are looking forward to the sometime early July when the tariff more on the tariff details emerged in terms of the pause that the US administration has put on the tariffs. What is the way forward? What kind of trade deals are happening? And I think from a Fed's perspective, they would want to have a little more surety in terms of how the inflation is panning out, how demand is panning out, and hence in terms of the trajectory, in terms of the rates going forward, how it should pan out. In fact, we are still penciling in a couple of more rate cuts from the Fed, but towards the second half in terms of the latter half of the year rather than immediately. So that I think continues, and I think the news from the US will revolve around the tariff, what the path of the tariffs are, how labor market and demand conditions are panning out as a result of the tariff and the resultant inflation.
Before we let you go, just want to get your sense on how urban consumption demand is trending right now. We're hearing a lot from a lot of these consumption players and counterparts in the market that while rural is recovering slightly, and although we have this good monsoon, even that could give a fillip to the rural economy. But what about the urban consumption demand? Because that seems to have plateaued out very recently. Do you see any improvement on this front?
Well, the urban consumption has been weaker relatively to the rural demand, and the rural demand actually has been I would not say pretty strong, but at least has been quite stable and steady. On the urban side, I think we need to wait for a few more months because there are a few drivers which have fallen in place. We have seen a cyclical recovery in terms of the government spending. We have seen both the state and the central government. We have seen a pickup in terms of a gradual pickup and a very small pickup in terms of the urban formal jobs over the past few months. We have seen the government in the budget announce income tax relief. And these take time to typically, seep into the consumption demand per se. We also have had the RBI loosening the monetary policy as well as liquidity in the system, which will also translate with a lag, a couple of quarters lag in terms of demand in the urban consumption. So we are hopeful that the urban consumption will pick up sometime over the next couple of quarters, and the drivers are in place. Maybe the festive season is where we see the first kind of indications of a cyclical recovery. I would not classify it as a structural recovery, and a recovery which I'm not sure whether the recovery will continue over multiple quarters. But we will see some cyclical pickup since some of the drivers that we track in terms of the urban consumption have been starting to show an uptick over the past few months.
With this, we let you go on that. Thank you so much for taking the time out and speaking with us this morning.
Thank you.